Basic stock market terms. Now, there are plenty of words and phrases that might get used on a day-to-day basis when it comes to dealing with the stock market. But in this video, we'll break down 11 key terms that I feel are extremely important, especially for beginners that are first getting started with the stock market. All right, so here we go. Number one, shares. Now, what a share is a unit of ownership in a company. Now, if you wanted to invest in a company, what you would do is buy shares. All right. Now, every company has a different price per share. Now, company A might be $10 per share. Company B might be $30 per share. Company C might be $100 per share, right? So on and so forth. Okay. So let's say you had $60 that you wanted to invest into a company, right? And that company was $10 per share. Now, with your 60, the most amount of shares that you would be able to purchase would be 6. Now, why is that? The $60 that you have divided by that $10 per share equals 6. All right. Now, up next, we have what we call a ticker symbol. All right. Now, what a ticker symbol is usually a short code of letters that truly identify a company. Right. So let's take, for example, Netflix. Their ticker symbol is NFLX. Take, for example, Microsoft. Theirs is MSFT. Now, it's very important that you know your ticker symbol and make sure that you don't enter in the wrong one before entering a trade or investment. All right. Now, it's extremely crucial that you know what the exact one is, because let's say you want to do research on Facebook, right? Now, if you typed in Facebook into Google, so many things would pop up in relation to Facebook. But if you typed in their ticker symbol, it'll be the exact information that you're looking for. So you want to make sure that you understand what the ticker symbol is for your specific company that you're interested in investing. Buy versus sell. Now, this is exactly what it sounds like, okay? If you're interested in investing in a company, you would then buy the shares. If you're interested in no longer having the shares in that company, you would then sell the shares. Now, you can buy and sell at your own discretion, right? A lot of people ask, when do I buy or what do I buy? The reality is it really is up to you. You really do have that decision. Now, I will say 99% of the time, or the majority of the time, when you first buy shares in a company versus when you sell, that number is usually different, okay? If you buy into a company and it's at, let's say, $15.50, most likely that number won't be the same the next day, whether it's higher or lower. But just make sure you understand that when you buy shares versus selling shares, all right? Up next is entry point. Now, your entry point is basically the original price per share that you first got in at. So let's say you bought a company at $20 per share, and tomorrow is $25 per share. Your entry point would still be 20. Why? Because that is where you got in. Now, the thing is about entry point is that it doesn't change, all right? So again, if you first bought in at 20, the next day it's at 25, and the day after that, for whatever reason, it drops down to 10, your entry point would still be $20 because that is where you originally got in at, okay? And you might hear some people say, oh, I got in here. That would mean that their entry point was a number that follows whatever it is that they're saying, okay? So you want to make sure that you understand what your entry point is before and after you hold on to an investment, all right? Number 5 is portfolio. And what your portfolio is basically your collection of stocks that you have shares in, right? So let's say you have shares in company A, company B, company C, company D, so on and so forth. Those all would make up your portfolio. So think of it this way, right? You're the CEO of your own portfolio. You're the head coach, if you will, of your portfolio. And all of your stocks, or the stocks that you own, make up that portfolio, okay? So whenever you hear someone use that word, that's just thinking of the things that they own and the things that they have shares in, all right? Up next is swing trading. Now, swing trading is basically opening and closing positions, buying and selling for days and even weeks at a time. All right, now swing trading is a little bit more for the short term. It's a little bit more for the in and out kind of play, as opposed to investing, which is more for the long term. All right, now swing trading does involve activity within the market, but it's definitely more focused on the short term plays. All right. Lucky number 7 is dividends. All right. Now, what dividends are is basically when the company pays you for simply having shares in that company. All right. It's basically like a thank you on behalf of that company for investing in them. All right. Now, be careful, though. Not every company offers dividends. All right. So you want to make sure you do your research and check to see if that company offers dividends or not. Now, the good thing about dividends is that they're a form of passive income. You really don't have to do much in order to receive them, except for owning shares of that company. Now, needless to say, the more shares you own in that company, the higher your dividend payout will be. Now, sometimes you can accept that dividend within cash. Sometimes you can reinvest that dividend into the company. Okay, you really have that option, but that's basically what dividends are. Next term we have is ETF. Now, what ETF stands for is Exchange Traded Fund. All right. Now, an ETF is basically like a basket of different assets, right? So let's say inside this basket, you have company A makes up 25%, company B makes up another 25%, company C makes up another 25%, and company D makes up another 25%, all right? So it's like a basket of assets that really allow you to invest into that one single ETF, all right? Now, ETFs aren't like regular stocks, okay? But they can be bought and sold like regular stocks. So you really want to keep that in mind. So a couple of common ETFs that are out there are VOO, another one is VTI, another one is SPY. Now, again, that's not advice or a suggestion for you to necessarily buy those ETFs, but those are some common ones that a lot of people tend to look into, all right? Number 9 on the list is risk tolerance, all right? When it comes to risk tolerance, you want to make sure that you understand what you're able to risk beforehand, all right? And there's a lot of different approaches when it comes to investing and trading, right? The idea of having an aggressive approach that you want to be all in on something, or you want to be conservative, a little bit more on the safer side. There's no right or wrong answer to either of them, but as long as you make sure that you understand what your specific risk tolerance and what your specific strategy is beforehand, all right? At number 10, we have watch lists, all right? Now, a watch list is basically a list of companies that you may have your eyes on, all right? Now, some of them can be companies that you're already invested in, and some of them can be companies that you're not invested in, all right? There's thousands of companies out there, okay? So it's going to be tough to really manage, look at every single one of them on a day-to-day basis. So this is where watch lists come in handy. Now, you can keep watch lists on your phone, in your notes app, electronically through your brokerage account, but you want to make sure that you have at least one watch list out there. Some people have like as little as 3, some people have 10, and some people have 100 on their watch list. But watch lists can definitely be beneficial. And last but not least, we have brokerage accounts. All right. Now, what a brokerage account is basically an investment account that allows you to buy and sell the shares and ETFs that we mentioned before. Now, there's plenty of brokerage accounts out there, such as TD Ameritrade, E-Trade, Charles Schwab, Robinhood. Now, if you would like to use Robinhood, feel free to use the link in the description of this video, and you and I both will receive a free stock based off the timing of this video. All right. So there you have it. Those are your basic stock market terms. We went over 11 keywords and phrases when it comes to dealing with the stock market. And as usual, I hope this video helped, and we'll see you all in the next one. Stay blessed.